Okay, so welcome back to another video on the channel. Now today we're going to be talking about breaks of structure. Reason being is they're very subjective and they're very easy to get wrong. So I wanted to do a video today showing you exactly everything you need to know about breaks of structure, what's actually important, what isn't, and that way you will never ever have the issue of getting it wrong or getting caught in a fake out again. So if that's something you've struggled with, stay on this video because I'm going to show you exactly what you need to look at when trading. Okay, so as you can see, we are on the charts now. Now I've changed my colors because I got bored. So let me know what you think of that in the comments. But in terms of break of structure, what are you actually going to be looking for? Well, there's a few things. First of all, and I think the main thing is you need to be selective of what highs and lows you're using. So for example, if we just take this range here, you could argue that these are all highs. This is a high and this is a high. Now the problem is sometimes you can choose the wrong high or an insignificant high. So to make it easier for yourself, just focus on highs that cause some sort of influential move or are at the top or bottom of a swing. And what I mean by that is you have this swing high and this swing low. So these are your two major ones. If you break out of either of these, you could probably expect price to go in that direction. Now, when you're looking more at internal highs, I guess is the best way of calling them, you want to look at what they actually did and if they broke structure. So for example, if you're looking at these highs here, they didn't really do anything to this leg here. They didn't break any structure. So I would be a lot more wary around trading a break of structure of these highs. Now, in terms of, that break of structure, you want to look for key candles. That's the second point. When it breaks structure, what does that look like? For example, if you get a break of structure like this with this candle to the upside, that visually looks like a very strong break. It's a massive push to the upside. It breaks above the high and it's closing well above the high. Now, a break that maybe isn't as weak would be something like this, where if I mark it on, I need to change the color of that, where if you mark it on, as you can see, if I zoom in, it did technically break structure. It did break and close below this low, but it did not do it with much momentum if you look compared to this candle. So there's a lot of visual work here as well. You need to be looking at how the candles are reacting and seeing how strong of a break they really produce, because you don't want to be in a position where it doesn't break strongly, because that could be another indication of a weaker break to the upside. So that's the first two main points I'd say, is how the candle breaks structure and which highs and lows you're using. So I'll go through this a few more times just to show you on different trends and types. So for example, if you look at this bit of structure here, we have this high, this low, this high, this low, and what do we see? Well, we need to again first identify the actual swing highs and lows, really, where you've got this is a high, this is a low, and this is the next big push up. Now this is your first indication. If you look at this candle, it's a strong push to the upside, breaking above this high, giving a strong example of a break. Now what do we have here though is we have this low and we get a break, but visually ask yourself, does this look like a strong break to the downside? No, it doesn't. And so that again comes back to what I was saying about look at the actual candles, see how it reacts. If you compare this break to this to the upside of this high, this is a far more, impressive break than this break to the downside. This isn't a really strong break, really strong momentum showing that push to the downside. And what do you have? A massive then push to the upside, breaking above this high and continuing that bullish trend. And so this ties into liquidity, and I've done videos on liquidity, but all this is, doing is getting more people, getting more sellers in here because they see a break of the downside. It's getting more sellers when they see breaks of structure. It's getting all that liquidity involved to make that massive push to the upside. And that's why you have such a strong reaction to the upside, because there's so much liquidity and volume now pumped into this move around here that it can, jump, how many pips is that? Like quite a few, like couple hundred at least, like 500 pips I think that is, around 500 pips. So that's kind of why it's doing it. It's building up that liquidity, but that, as I said, is for a different video. What we're focusing on is breaks of structure. So again, you need to look at how price breaks the high or the low, and you need to look at what highs and lows you're looking at. So for example, if I was coming to the charts now, what would I be looking? Well, we have this swing low, we have the swing high. There's our first two. I guess that can be your trading range, right? You got the high and the low. Now everything in here is, I guess, technically consolidation, but you want to be selective. Obviously we've had some minor breaks to the upside, but we're still trending upwards. However, what we might see is this low, which did cause a break of the previous high, so it is a valid low. We might get a break of this low. We might get something like this where price comes down and closes maybe, even below both lows. That is then a great sell signal to continue to the downside. But even if we don't break below this low here, it's still a good opportunity to preempt the short to continue further, because we're failing to break above the swing high, we're failing to break above this minor high, and we've broken genuine structure to the downside. And so that is exactly what I would be looking for when coming to the markets. And you can flip it the same way, where if we get a break above this high, maybe like a really bullish one above even the swing high, you can then look to continue price to the upside. So again, you want to look at how it breaks structure and what highs and lows it breaks. So the other bit I wanted to point out is looking at wicks and using wicks. Now I see some traders use wicks, and I guess that works. If people use it, then fair, but me personally, you have to use the bodies of the candles. You should not be using wicks as your break of structure. Now I've spoken about this before. The reason being is wicks are just simply showing you where price has gone in that particular time span. So if I'm on the 15 minutes, the wick for each candle is going to show me where price went in terms of to the upside and to the downside within those 15 minutes. That does not mean that that is where current price is or spot price is at. And so that's why you should use the candle close or the bodies of the candles, because that is exactly the point in price or pip, where to the pip where price has closed and moved on to the next candle. So let me show you what I'm talking about. So if you look here at GU again, now with wicks, obviously you're going to be looking at stuff like this and be looking at certain trades. Now wicks you want to be careful with, because that is also a form of manipulation. For example, say you took this high here. Now why would you take this high? It was the end of a pull up, pull, create the high, pull down, create another high just above. Not really the strongest break, but then you do get that proper break to the upside. So you take this high, for example. Therefore, this would be your low here that you would be looking at to go short. And what do you have? You push up, and guess what? In this candle here, where does the wick end up? Down here. Now, if you're trading wicks as breaks of structure, this would for you count as a break to the downside, and so you're going to go short and you're going to get stopped out. And so it's really important that you don't use wicks for breaks of structure because of this reason. You can get manipulated out of positions far easier. Same with even this one. I know the body did just close below the low, but if you're using wicks, that's a pretty strong break to the downside. If you are looking at wick breaks where, say, you're going to take this as the low, what's happened is wicked in below the low, taken the previous wick, and then gone to the upside, and it would have stopped you out. And reason being is a lot of traders like to view this as a liquidity grab, where price comes into a previous low, stops out sellers, allows buyers to get into positions before moving to the upside. And funnily enough, that is exactly what I did. I actually bought down here in my last live trading video. If you want to check that out, it's on the channel. But we got buys literally on that bottom of the move there. So that is why you don't want to be using wicks. Same again with this. If you saw price push up and close up here, you may have gone long here, and you may have been stopped out before it continued in your direction. So please, when you're trading and looking at wicks, make sure that you do not count wicks as breaks of structure. Only look at where bodies have actually closed and gone. So for example, this would be a strong break, or you could look at this being a strong break of this high, or this would be a strong break of this low because we push straight through it. That's kind of what you're wanting to see. So if I draw an ideal scenario, it would be, say you're in an uptrend and you have this high, you get a big push up above, strong momentum to the upside. That would be a great opportunity to continue. And that's where you can use things like support resistance, you could use fair value gaps, fibs, whatever it is that you prefer. But that is how you want to be looking. You don't want to be in a position where you do this and then price comes down, and say you get a wick from here to here below this low, but the price of the candle actually closes up here. What will probably happen is price will continue to the upside while you've been shorted out of the market. So make sure you're doing this option as opposed to this option. So those are my 3 tips for trading breaks of structure, looking at breaks of structure. Make sure you get the right ones. Is make sure that you choose the right highs and lows. Always mark out your trading range with your swing high and your swing low, and then make sure you're really careful about what structure you use in the middle of that. And then you also want to look at how visually price breaks structure. Does it break with momentum, or is there not much behind it? And then lastly, you want to use the bodies and the body closes of the candles, not the wicks, because that's going to manipulate you far more. But I do know some people that use that, and if that's their preference, then so be it. But for me, it has to be where price has actually closed, not where price has been in those 15 minutes. But either way, hopefully you found that video useful. If you did, let me know in the comments, and I will see you tomorrow for the next one.